Okay, let me start. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the week of 23rd to 27th of May, the last week of May. And during my Asian session live market analysis on the forecast webinar that I'm going to give it today, that is 23rd of May, between 5 and 5:30 GMT, I'll give the forecast for the week 23rd to 27th of this week. And also, I will give the range in which the currencies are expected to swing. And also, we'll do the market reading by using the initial lows and the highs set around 3:30 GMT and find out in what way the market is expected to move in this particular week. And this way, we follow the forecast, and also we use the market reading technique to fine-tune the forecast. Besides, in the event if the market goes against us, we try to use the trading strategy to limit the risk and maximize the profit. As a result, we continue to earn money from the market irrespective of the market move. So that is basically the important aspect, that we should be in a position to make money from that other market. Once you start making money from that other market, there are two things which could happen. One is the greed. That is, we might be tempted to feel that the going is good, so we will commit more so that more earning can be made out of that. The other thing is we will get rid of the market fear. But the first one, the greed, we should try to avoid. Consistently, if you trade without over trading, we'll be able to make money. And the fearless trade is always healthier, so that once you get rid of the fear, you find you are able to really perceive the market in the right perception or in the right way, rather than trying to become victim of the act of the players. Now, this being the fourth week of May, we will continue to see the trending move. So the market is expected to make swing and rise moves during this particular week. And here I have given the days of the week and also the sessions, Japanese, European, and the US sessions. The session timings are also given. So here I explained it, swing and rise move. That means the first 1.5 hours from the start of the session, if you try to take a buy, before 7 GMT, if we close, we'll be able to see almost close to 100% profit. And that you will be able to recognize, provided you also follow that you bet on the right currency pair. The currency pair which makes more than 40 pips spread between the high and the low, if you try to take the position, you'll be able to really earn money from that other market. And for that, we used the live market code page. In this live market code page, you can see that the currencies, the current levels of the currencies are given, the 4 majors and the 2 commodity pairs. And also you come across the high and the low set so far from the start of the day. And also the net change from that of the previous close. That is, previous close is Friday closing. So here if you see, Euro is showing positive net change, GBP is showing positive net change, Australian dollar is showing positive net change. Then USD and USD CHF and USD CAD are showing negative net change. That means the players are at the moment doing the USD weakening move to start with. And so this is how we read the intentions of the players from time to time. And also see that spread is more than 40 pips in order to bet in any currency pair. So if the spread is not increased to 40 pips, then you wait for them to increase it. Then you commit position. What happens, instead of Japanese session, if we try to take the position during the European session, we'll be able to quickly book profit. If the spread is not there, don't commit, because 1 or 2 pairs, they might swing and rise. The other pairs, they might keep it subdued. But the European session, they will try to make it more active. So for that, we need to read the intentions of the players, identifying the type of moves they are trying to do it in the market by looking into the market whether they are near the high or near the low. Now euro is in the middle level and USDN is closer to that of the low. Still it is in the middle level, and again GBP is in the middle level of the high and the low. Then USD CHF is also in the middle level. USD CAD is also in the middle level. Australian dollar is the only one which is closer to that of the high, and it is away from that of the low. So after identifying where they are, then you have to find out that what sort of trades you can do it. And if they either breach the high and stay above there for more than 30 minutes, understand that they will quickly gain the levels for another 2 hours at least. Then you can do a breakout trade. Or they continue to breach the high and go above as an intentional move that can be identified when they make the cutting of the high by 1 pip, 2 pips and things like that. And slowly if they breach the high and go above, that means it is intentional move. An extended move is the one wherein they just quickly breach the high, stop cutting the new high, and start making the slide after 30 minutes. And that is extended move on there. That is a stop and followed by that of a quick move is always either an extended move or a stop and. Stop and happens in less than 30 minutes. Extended move happens for about 2 hours. Then they reverse the market. So if you identify the type of moves they are doing it, then it is easy for you to follow the forecast and fine tune your entry and then try to make money from that other market. So today, 23rd of May, they are expected to consistently gain the levels during that of the 3 sessions. Then tomorrow, 24th, they are expected to make the slide during that of the Japanese session, and then firm up during European, and then gain more during that of the US session. Then on Wednesday, they are expected to gain the levels during Japanese and the European session, and then during that of the US session, they are expected to make the slide or a profit booking out of the gains. Then on Thursday, they are expected to make the swing and firm up during that of the European and the US session. But slide is expected to happen during the European session. Then on the last day of the week, they are expected to make a dip and then rise and then continue to gain the levels during the European and the US sessions. Then you come across the month in time. That is 30th and 31st of May, followed by 1st, 2nd, and 3rd of June, fall in the next week. And so you come across the month of May gets over and the new month June starts. So whenever you come across in a week, the month gets over and the new week starts, new month starts, then the market is expected to be highly volatile. They are expected to make within a 5 days frame, they will try to make dips or moves in the market in order to set the lows and the highs for the month, and then they are expected to make extreme moves and extended stoppers. So normally when you come across the last week of the month gets over and the first week of the new month starts in a new week, then they will have about 10 days to manipulate the market in order to handle the derivative market. But in a week when there are only 5 trading days and the month gets over and the new month starts, then they handle the derivative market of the expiring month and the derivative market of the new month. So both they try to handle it, and then you come across aggressive moves happening in the market. Then these are all the levels in which the currencies are expected to swing during this particular week. Euro is expected to swing from the 1.12 to 1.16 area. Then GBP to 1.4475 or 45 level to 49. Then USDN from 109.50 to 113.25. Then CHF from 0.98 to 1.01 area. Then Canadian dollar is expected to swing from that of 1.29 to 1.3250. Australian dollar from that of 0.72 to 76 area. So they are expected to swing in this particular range, and during this particular week, as they breach the highs and the lows, I will note down the extended low or the extended high and show it on Friday. The levels, what they showed it as a low for the week and the high for the week. Then you will be able to understand how the market is respecting the mathematically derived levels in which they swing the market. Now coming to the of the market reading. So I noted down the initial lows and the highs set in the 4 majors and 2 commodity pairs here, and every day we can note down the initial lows and the highs, noting down around 3:30 GMT, and then that will give the insight for you to find out what they are trying to do it in the market, whether they wanted to breach the high and go above or breach the low and go below. That means you will be able to see, okay, anybody who has taken a buy position here or anybody who has taken the sell position in the case of euro, what happens during the rest of the days. So you can note down the next day. A person who has taken a sell position is able to book profit, or a person who has taken the buy position is able to book profit. Because in the market you come across many of the traders after taking position. If the position is making profit, they will try to maximize the profit out of greed. And if the position is making loss, then they will try to hold the position without closing it in order to see that they are able to book at least a small profit or just cut loss with a small loss. So when the traders hold the positions like that, you will be able to feel easily how the players are trying to trap the bullish traders as well as the bearish traders alternatively. Now, in the case of euro 1.1214, 1.1233, or the initial lows and the highs, the low has not been breached, but the high is they have breached it and went up to 1.1243, about 10 pips above, then start coming down and below that of 1.1233. So they made a brief upward stop and then holding it. So we need to see what they are going to do it during the late session from 5:30 GMT up to 7 GMT. Then in the case of GBP, 1.4488 is the low, 1.4509 is the high. They again, in the case of GBP, the low is not been breached, but the high has been breached, 1.4525. They went up to and holding above that of 1.4509. So it clearly indicates that the GBP they wanted to gain first. Then in the case of yen, 109.64 is the low, 110.25 is the high. They are not breached the high or the low. They want to hold USD yen for some time before handling euro and GBP. Later on, USD yen is expected to gain the levels. Then in the case of CHF, 98.94 is the low. They breached the low by 10 pips to 98.84. They have shown it. 99.12 is intact. So that means they will be making further downward move in the case of USD CHF. Then in the case of Canadian dollar, 1.3105 is the low. They breached it and formed 1.3099 and come above slightly and holding it. And 1.3127 is intact. So they just made a brief dip and then come above and they now sustain the high and they will try to go down further. In the case of Australian dollar, 72.23 is the low, 72.39 was the initial high. They breached the high and went up to 72.60 and then come down below to 72.47. It clearly says that they are holding above that of the initial high more than 30 minutes. So that means they wanted to slowly gain the levels in the case of Australian dollar. So they wanted to gain the levels in the case of the commodity pairs to start with. As you know, the commodity pairs lead the rally and lag behind. They will make aggressive gains in the case of commodity pairs. There is Australian dollar is expected to gain and USD CAD is expected to come down. And later on, they will make the move slow in the case of commodity pairs and handle that of the majors. So you know that sequentially they are making the moves. First, they will handle the commodity crosses and the commodity pairs. Then the yen and the N crosses. Then later on the majors, the four majors, and finally the European crosses. That is the cross between Euro, GBP and CHF. So that is how they make the moves in the market. So follow that and try to commit positions accordingly so that you will be able to consistently earn money from the market without any market fear. Now I kept the buy orders in the case of Euro closer to that of the initial low. Similarly, in the case of GBP, also closer to that of the initial low, and Yen also closer to that of the initial low, but they are not filled it. So once they fill it, then we can keep the hedge order 30 pips below, and also 30 pips take profit order. Once the position start making profit of 15-25 pips, then you can keep stop at entry and remove the hedge orders. So here you find the hedge orders are used instead of stop. And then once the market goes up, then we can trail the stop in profit making position and also move away the exit order on the higher level so that we'll be able to really maximize the profit. So if the market hit your trailing stop, then you will have minimal profit. And if they try to hit your limit order, you will be able to get the maximum profit. That way, in 30 pips range, you'll be able to really control your position and see that you are able to get the maximum profit possible from that of that particular trade. And in the event if they hedged you, and if the market goes against, that means the market is going down further, then the hedging is making profit. Then you can keep stop at entry in the hedge. And if the hedge is not, the stop, the entry is not being filled for 30 minutes, understand that they want to reverse the market. So you can simply close your buy position and maximize the profit using a trailing stop in the sell side and get more than that of the loss we have made in closing the buy position. Suppose you closed the buy with 30 pips loss, and if you earned 45 to 50 pips on the downside, you have a net profit of 20 pips on that trade. So you can simply reverse it if you want, if you know how to read the intentions of the players. Suppose you are not able to read well, doesn't matter, you can keep stop at entry here in the sell side of the hedge. Then once that is closed, then keep another hedge order to limit the risk by keeping 30 pips below the market, the hedge order, and trail up the hedge order as they raise the market. And once it goes above that of the buy side, you keep stop at entry in the buy and remove the hedge order and try to book profit. So that way you do the unidirectional trade, but you don't take unlimited risk. Use the hedge order to limit the risk. If you use the stop, then you are stopped out. Instead, if you use the hedge and keep stop at entry in the hedge, we don't lose anything, but we will not allow the equity to erode. Once the equity erodes, immediately you get the market fear. So to avoid it, you can use the hedge order. Then you can use the hedge to book either way profit also. In case the hedging is making profit, you can see how far they are dropping it. Stop cutting the new low for more than 30 minutes to 2 hours. You read whether it is an intentional move on the downside or an extended move for 2 hours. You close the positions, hedge with the profit, and keep another hedge order to limit the risk. And once they start gaining the level, you trail the hedge order lower, keeping 30 pips away from the market, and trail it up to you are reaching up to that level of the buy. Then later on, you keep stop at entry in the buy and remove the hedge order and try to book profit on the buy side as well. So that means you are able to do either way trades. That is, whether the market drops, you book profit in the hedge. If the market rises, you book profit in your original buy position. So that way, if you try to trade it, you find that the market fear goes up. Then this is the market timing chart. So it shows that early and the late sessions of each of the sessions, and also the mid sessions. The early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. In between section, you come across 30 minutes time frame. Between US and the Japanese session of the next day, you come across 4 hours of time. gap, and during that time they make all false moves. So gap time moves are false moves. Keep it in mind. So let me answer the questions which are asked here. Well, Hazan, is it the right time to hold a position trade in euro to the upside? Yes, you can buy and hold it, and you'll be able to really maximize the profit. But always keep stop at entry in the profit making position. Then you try to do the position trade, because nowadays what they are doing is they are handling the European crosses in a big way. So for that they drop euro, hold GBP, or drop GBP, hold euro. That sort of moves they are doing it. So you need to identify which currency they are going to rise, which currency they are going to drop. Accordingly, take position and keep stop at entry, so that you will be able to really do the position trade. Is there any question? Is there any question? You can ask me. I will answer to those questions. I will show you the focus slide again. Yes. Well, GBP USD break new high this week. Yes, they are expected to take GBP above that of 1.47 area. It's a great position trade opportunity in the case of GBP. So these are all the session-wise forecast for this week. So most of the days they are expected to firm up and rise. So dips are buy opportunities in the market. So whenever they make a dip, don't be afraid. Don't immediately look into the chart and see that it could go further down deeply, but they are going to restrict the dip and induce the traders to short sell, or those who are holding long, they will induce them to liquidate and then start gaining the levels. So the players are here to trap the traders, and only then they will be able to make money. So always keep in mind, all quick moves are false moves in the market. They make such quick moves in order to trigger the fear of the traders. That is why I say that if you use the H order, we'll be able to really get rid of the market fear. Once you get rid of the market fear, you can easily understand the market is fully manipulated. Not even one quick move can happen on its own. The players have to do the circular trades. Only then you come across the swings in the market happening. Is there any question? Okay, this is the chart for the forecast, and this is the range in which the currencies are expected to swing. We'll come across euro and GBP started gaining the levels. Along with that, USDN and USDCH are also expected to gain the levels as a contrarian move. So that you have to keep it in mind. Okay, what about Aussie? Aussie is also expected to gain the levels, as I told you last Friday webinar, that in the case of Australian dollar, what they do is they gain corresponding to that of euro and GBP. Say euro is gaining about 500 pips, GBP is gaining 500 pips. They also gain levels in the case of Australian dollar 500 pips. But they continue to gain. What will happen? Australian dollar will go above that of parity. So they don't do that. Instead, what they do, they just drop Australian dollar when euro and GBP are gaining, and again gain back. So that is how they make the wide range swings in the case of Australian dollar and keep it in a wide range. And only on the multi-year trend reversal, they took Australian dollar to 1.10. Nowadays, they will not take it above that of 0.85 or 87 level. So they will just gain the levels and drop it back, and again gains level and drop it back. That we need to understand. Once they do the consolidation at a higher level with the frequent upward stop, and understand they want to reverse. And always keep in mind that the commodity pairs lead the rally and lag behind. That means they will quickly gain. If you see the net change in the case of Australian dollar is 27 pips when compared to 4 pips in the case of GBP and 6 pips in the case of Euro. But later on, you just see it on Friday. Australian dollar will be showing negative net change. Euro and GBP will be showing positive net change. That is how they make it. So these are all the tricks of the trade. You need to understand cumulatively how they are handling the market. Then you will be able to select the right currency and trade. So you have to perceive it and you have to sense it. Then you find your trading becomes highly successful. So I kept the orders, and once the orders are filled, they will become the positions, and later on I'll try to handle it using the hedge as well as the exit order. More questions? So I take this opportunity to thank FX Street for the facilities provided to present the webinar. Okay. I take this opportunity to thank FX Street for the facilities provided to present the webinar. And thank you all for your coming here and listening to the webinar, and try to see that you are able to perceive the market without any fear, and then do easily the trades, and see simply using the charts and simply using the fundamentals may not be in a position to help you. Instead, if you focus on the market perception and the trading strategy, you will be able to consistently earn money from that other market. So wish you all happy trading. See you on Friday.